Is the sky falling? Uh, well, I'm old enough to come through the crash of '87, and that was a doozy. I don't expect that this time around, nor even anything as great as bad as the housing bubble burst, or the in 2008, or the tech stock bust in the year 2000. But we're definitely seeing, as I predicted, um, when the interest rates go up, the stock prices are going to go down. And I think people are not expecting the Fed to do a full 75 basis point raise to the rates today, but they did. And so the market's reacting negatively to that. Now I'm going to share my screen here and talk about where does that leave me, for example. The the market closed down, the Dow down 505 points, the NASDAQ down 366, S&P 500 down 96, and the Russell 2000 down 60 points, more or less. Okay. And the stock, of course, I'm most interested in is Hanesbrands International, and it dropped 32 cents. That's a significant drop, particularly when you consider I've got 17 open put contracts, which will almost certainly be exercised at 750. So that's going to give me a cost basis of 750 a share. The call contracts at $7 may not get called, which means I'm going to end up with 2,100 shares of stock. No, 1,900 shares of stock. And I believe all of it will have a cost basis of 750. Now, where does that leave me? Okay. I'm going to scroll down to the thing that you need to commit to memory. See down here in the green? It's not so much what I paid for it or what I sold it for, rather it's my replacement cost. Success is measured by how many contracts I can cover and the revenue it produces. So it's all about the revenue stream. So at any rate, come Friday, I will be selling 19 call contracts as near to the market close of price of the stock on Friday. Now that will likely be seriously below 750. But that doesn't put me into a panic, because I'm more than likely to be able to replace it well below 750. And as long as I continue to do that, that washes out capital losses. So it's going to be great for my free cash flow in the short term. For my gap measurement, not so good. But I'm good with that. That's what it's all about, that revenue stream. So if you find yourself in the same boat as I today, don't despair. If I can make a quote from a Dickens novel, Tale of Two Cities, these were the best of times and the worst of times. And then as now, it depends on your perspective. Okay, well, this will be interesting over the next few days, weeks. I'm hoping this downturn will be severe enough that we don't have a V-shaped recovery. I want an L-shaped recovery. I want it to drift along the bottom for a while. That works better for me in terms of the premiums I can collect while it's staying pretty much level. If you like this, please subscribe, like, and notify. I appreciate it.